What's up everybody, Nate here, and it's safe to say that our entire economy right now is in shambles.
The economy has been in shambles for a year.
In 2021, it seemed like everything was going way up. We had the stock market hitting record highs, we had the housing market, and also our GDP going way up from record bottoms in 2020. But now in 2022, the entire script is being flipped. We have a recession possibly around the corner, and also the Federal Reserve is raising its interest rates, causing mass unemployment and layoffs throughout the United States. So now this is where you have to be financially educated and aware of what's going on with your money. So today we're going to talk about why you need to be saving money in 2023 and exactly how to get it done right. So saving as a general financial concept is very important for your finances, and it's basically going to act as the backbone for all of your other money-making decisions. People save money for a variety of different things, like if they want to buy something or if they want to actually protect themselves against an emergency. I mentioned it before, but right now we are starting to see mass layoffs, and we're starting to see people lose their jobs because of the Federal Reserve. The Federal Reserve is raising interest rates, and that's causing a lot of businesses to cut their staff, and that is leading to mass unemployment throughout the country. And what that means is now millions of Americans are not going to have an income. They're not going to be able to pay their bills in a time where inflation is making the prices for everything like living expenses and shelter and food and energy skyrocket throughout the country. And since we don't know what's going to happen next, you don't know what your business is going to do with your job. And if you rely on your business or anything else in order to keep money flowing in, you're basically setting yourself up for failure, because now if you suddenly lose your income, you have a whole bunch of bills that you need to pay for, and those bills can't get paid for if you don't have a job. And what a recession like this might cause is a further gap between the haves and the have-nots in the United States. You're going to see a lot of people who actually generally become wealthier during a recession, and you're going to see people who get a whole lot more poor. So you have to essentially protect yourself, and the easiest way to do that is to start saving money. Because there's going to be people out there that know how to use money the right way, and there's going to be people out there that lose their job and continue to take on more debt and more debt, which is only going to push them into more financial ruin. This is why it's going to be extremely important for you to save your money into 2023. Now, you're going to want to save your money for two major reasons. The first and foremost is because of an emergency. If we see something happen in 2023, like you lose your job or you have a huge expense that you have to now pay that was completely unexpected, you're going to want to have savings set aside specifically for that purpose, so that way you don't have to take on any additional debt and you're able to continue to pay for the rest of your bills like nothing really happened financially. In doing so, you are essentially protecting yourself, and especially in a time where everything continues to go up in price, you're going to want to have something saved up in order to buy something or fix something if you have an emergency arise. How much you should actually be saving? Well, that's going to depend on you and your situation, right? Because everybody has different responsibilities, and because everybody has different levels of debt and different levels of spending, not everybody's going to be able to save the exact same amount every single month. But one easy way to save is to actually incorporate it into the rest of your budget. And you can do that with something called the 50-30-20 plan. In this plan, you're going to take every single dollar that you earn and you're going to assign it a job. That means 50% of every dollar that you earn is going to go towards spending. Spending is things like wants and needs, things that you have to spend money on and things that you want to spend money on. Then you're going to take 30% of that money and you're going to allocate it towards investing. Investing is what's going to keep your money earning value even during a recession, and you need to do that in order to protect yourself in the long term and in the distant future, right? Then you're going to take the remaining amount of your money and you're going to start saving it. So 20% of every dollar that you earn goes towards saving, and this is going to create a budget for you. So now this budget is going to be the ground floor for your entire finances, and it's going to allow you to figure out where every single one of your dollars is going every single day, every single week, and every single month. You take a little bit more accountability this way with your money, and you're able to save, spend, and invest a whole lot better. Like I said, that's going to look different for every single individual. Now, I will say this whole budget works if you have some amount of money saved up to begin with, but if you have nothing saved up at all right now, you're watching this video and you say, Nate, I have no money in savings, that needs to be your priority first. So you want to scrap the the budget idea and you want to save most of your money if you can. You want to try to get up to $2,000 to maybe $3,000 because that's going to protect you from most of life's emergencies. If your car breaks down or you have something happen to your house, usually that's going to cost you around $2,000 to $3,000. So you want to have that money set aside in the first place so that way you don't have to go into more debt. You don't have to take on a loan to fix things, and you don't have to cut back all of your spending in order to figure out this one inconvenience. Once you have that initial baseline of around $2,000 to $3,000 saved up, now you want to try to save up more and more money to kind of protect yourself for a longer period of time, and this is going to come down to your own risk tolerance. If you want to protect yourself for say 3 months, then you have to take all of your expenses and then multiply them by how many months you want to protect yourself for. So you take all of your costs and multiply them by 3, and that is the amount that you have to save for. If you want to save for 6 months, then you do the exact same thing, and so on and so forth. And this is extremely important because we don't really know what's going to happen with the future of the jobs market. So one thing that we could see in 2023 is a lot more unemployment because of firings and layoffs, but we don't really know when a lot more jobs are going to be created. It could be a couple months, it could be an entire year. Nobody really knows what's going to happen next, so you have to kind of build that long-term savings if something was to happen. But I wouldn't really save for longer than a year because we do still have things like inflation, and inflation is going to eat away at the value of your money over time, and it means that all of the buying power is just going to go down. So you don't want to have too much money set aside because it's simply just going to be losing value. Once you've saved up 3 to 6 months worth of expenses, then you do not need to save any more money. Instead, you can take that 20% that you were saving before and then allocate it towards your investments. Now you are essentially saving for your future. You're taking all of this money and you're starting to invest it, whether that be in real estate or the stock market, whatever you want to invest in. Just make sure that you do your due diligence and you're investing in something that you truly firmly believe in and that you think is going to continue to go up in the future. This way your money can make you money, and this is something that you're going to want to start doing right now for 2023 because asset prices in the United States are most likely going to drop as unemployment rises and inflation starts to go down. We're going to see a lot of your stocks on the New York Stock Exchange essentially lose a good portion of their value, and that means that as an investor and somebody that has a really good financial base, you can go in and buy a lot of these stocks and shares in these companies at a discount. And eventually you can watch the value go way, way up. This is exactly why millionaires become billionaires during a recession. They buy when asset prices are really low and they can buy even more because they have the money to spend. You can be in the exact same financial place if you have a really good savings fund. Think about it this way: if you're protected, then nothing in your finances is going to change. If you lose your job, then well, yeah, that sucks and you need to go out and find a new job, but it's not going to mean that you lose your house. In fact, you're going to be able to continue all of your financial activities the exact same way because you have that initial savings fund built up. You can now protect yourself and you can go out and continue to invest your money. That is going to create wealth down the road, and that could be what we're going to see in 2023. We're going to see a lot of wealth building opportunities, and the fact of the matter is many Americans are not going to be prepared for it, but the ones that are going to thrive. Not only do I want you to thrive in 2023 and 2024, but the fact of the matter is we are going to most likely see another recession and an economic downturn in the future. This will not be the last one. So you want to kind of prepare yourself for the next one, and of course the next one. And if you're prepared today, then you can kind of avoid a really bad situation for you and your family and your finances in the future. Economic cycles like this go up and down all the time. We can never predict when they're going to happen, so you always have to be prepared. And there's really no bad thing to being prepared because now you have all of this additional savings that you can use however you want. And if you are prepared correctly and you have a really good financial base with a savings account and you're already starting to invest, now every single time we have one of these economic downturns, you can essentially become wealthier and wealthier every single time. And now that wealth could essentially be translated into what changes you want to see throughout the world, and maybe you can even make a big enough impact on the planet to where we don't have as many recessions in the future. But none of that can happen in the future if you don't start saving your money today. That is it for me, everybody. everybody, be kind out there, and I'll see you all in the next one.